morning to everyone.
Good morning.
We're learning. We are learning,
Yes.
so we apologize.
We're thrilled you're here.
Absolutely. Well, it's 8:30. We've got a commitment to have this over by 8:45, so let's go ahead and get started. I'm Todd Healy, and on behalf of my partners Carolyn Smith and Celeste Moria, would like to welcome you to our inaugural, hence the little slip-ups at the front end, event of Coffee with C3. So the format for these calls will be about 15 minutes, exactly 15, not about 15, on timely topics that are affecting you directly or indirectly. We have muted everybody and their cameras are off, so we're controlling that from our end. If you have questions, please go to the box, the Q&A box, enter your questions in the box, and to the extent we get to them today, we'll answer them within that 15 minutes. If not, we'll get back to each of you individually. So today's topic is the impact of COVID on the life insurance industry. And with that, I'm going to ask Carolyn to introduce Celeste.
We could not have a better presenter this morning than Celeste Moria. She has 15 years in the life insurance industry, working particularly with a life insurance distribution company where she specialized in product and carrier analysis. During this time, we worked closely with Celeste, so we've known her a long time. After that, Celeste spent 2 years with 2 different carriers sitting at the table while products were being developed. So again, don't know of anyone better that could share insights into what's going on behind the life insurance curtain. Celeste grew up in the Valley as a certified Spanish translator, and in all her spare time, I don't think she sleeps, she's working on her CFP designation. So Celeste, good morning, and thank you for sharing your years of experience with us.
Good morning to everybody, and thank you very much, Carolyn.
Celeste, when I was early in the life insurance career, when universal life products were first developed, the interest crediting rate at that time was double digits. In some cases, it was 12%. Now we're seeing interest rates that are less than 50% of that, or maybe 25% of that. Can you explain why that's happening and the impact the economy and the interest rates are having and the virus on those products?
Absolutely. So I think it's best if we start by going over some of the mechanics. So life insurance companies primarily invest in very conservative bonds. So for decades, as you all know, the interest rates have been declining. And in the past few months, the declines have been pretty dramatic. And this continues to put a big strain on the insurance company's portfolio performance, which results in the companies having to lower their interest rates on the policyholder's policy. So those internal interest rates are having to be lowered. And the crazy part of this whole situation for us is that these changes are happening very quickly, faster than ever seen before in our industry. So just to put it into perspective, in the entire year of 2019, among the major insurance companies, there were about 50 interest rate changes. Just from March through May of this year, so just 3 months, there have been almost 80 changes. So just so fast and so many changes that are happening. And that's why we felt it was really important to talk about this today and share that information. But now, how does this impact the policyholder? And most importantly, why should you care? So when you bought your policy, the projected interest rate was key to estimating how long the policy was going to last. If the interest rate you earn is now dramatically lower, as Todd mentioned before, and you don't adjust your premium, your life insurance coverage will end sooner. So for example, let's say when you bought your policy, perhaps it was estimated to go out to age 100. But with the interest rate decrease, perhaps now it ends at age 85 if you don't adjust your premiums. So obviously this can be very detrimental to anybody's life insurance planning.
So Celeste, you've been talking about products that were, clients that already purchased and how the interest rates are changing. What is it doing to new products that the carriers may be trying to develop right now?
So just like we're seeing in the grocery stores, because of this COVID-19 situation, certain products are no longer available. And if they are, they may now be more expensive than before. Other changes that have come into play as well. So some examples of these changes are insurance companies discontinuing products, specifically those that pose a larger interest rate risk to their portfolio. There's also been limits on the amount of death benefit that can be purchased. So this can really impact some of our high net worth clients. Older ages, there's been restrictions as far as the maximum issue age. So right now, most insurance companies are not permitting coverage for insureds over age 70. There's definitely been increases in pricing, in some cases as much as 20%. And in the past, we usually had about 30 to 60 days to take advantage of current pricing from when the reprice occurred. Today, we're being given about 2 weeks or less in many situations. And the other really major big change has been just stricter underwriting guidelines for certain medical conditions. Overall, an applicant's medical history is being looked at much closer, and certain concessions that we can leverage in the past have been removed. And then, of course, as expected, there are restrictions on foreign travel because of COVID-19. So how does this impact you or your clients? Well, in summary, COVID and the continued very low interest rate environment is impacting products that you or your clients already own, and also new options that are available in the market.
Celeste, I think we've all been during this period of quarantine, and all of us going through our first, as we would say, first pandemic. We're hoping, well, but maybe after a period of time, maybe all this will change and we'll go back to where the grocery store has every product we like at every price we like, and everything will be good again. So how do you feel, or what are you seeing from your research, what we could expect in the insurance industry?
Well, like you said, Carolyn, you know, we're already experiencing in the rest of our life. From our experiences, the changes that we've seen in the life insurance industry will stay in place, and many are going to continue. So we expect the stricter underwriting is going to continue, especially with all the uncertainty around a vaccine for COVID-19 and the long-term impact to those that have been affected. We really don't know what that's going to be. Death as a result of COVID-19 is currently covered by life insurance companies. So they have there that they have to take into consideration. And on the interest rate side, even if interest rates do increase, insurance companies will not necessarily be able to increase their crediting rates at that same pace. So we definitely should expect a lag in those increases. Product reprices are something we also expect to continue. Although that's normal in our industry, we generally see product changes, product increases, and decreases. We expect that may continue at a faster rate than before, although some competition in the industry may help slow the rate of change. Additionally, more products will probably be discontinued, and those older age restrictions will more than likely be in place for a while. There's even been discussion among some of the insurance companies that they may lower the maximum issue ages across their product portfolio. Right now, products go out to age 90. That may no longer be an option in the future. We don't know what that age will be, but that's to be determined. For existing policyholders, so for everybody on this call, once again, we want to point out, why do you care? If you already own a policy, the internal charges, which some of you may know as cost of insurance or COIs, on some of these in-force products may change as well, more than likely increases, because that is essentially a lever the life insurance companies can use. And then lastly, you know, we think of term as a very simple product, and it's hard to imagine how a product that's not affected by interest rates would be affected by this current situation. Well, term products offer a very valuable feature that allows the insured to exchange their term policy for a permanent product with no new evidence of insurability, so no new medical underwriting. However, if you own a term policy, your future exchange options either may be very limited or may only include the company's less competitively priced products. So it's very important, more important than ever, to really understand the details of your contract.
Well, Celeste, with all these changes, and we've heard so many times in the last few months, it is what it is. What do you suggest to policy owners, insureds, that they should do at this point with all those changes you've laid out?
So great question. Three things: review, review, review. So the same thing, but emphatically, it's very important to review your policies. Most of the time, people don't understand what they have, or even they have it. In the majority of the cases that we look at, people have not looked at their policies in years and don't know if it has performed as expected. So I would urge you to consider, what is your must have? What is the most important to you and to your family right now? How does what you own compare to that must have? What, if any, gaps are there in your insurance portfolio? And if there are gaps, how can you best close them with either current or new coverage or other solutions that may be available to you? If new coverage is necessary, take advantage of current product offering and pricing. We know that life insurance is going to continue to be a valuable and very flexible financial tool, but continued pricing increases and crediting rate decreases are to be expected. So there really is no better time than the present to take advantage of what's available. And if nothing else, if there's nothing else that you are able to do at the moment, get some term coverage in place, protect durability. We just sent out a video about that we're happy to share with you if you haven't seen it. But you'll never be younger, and there's a possibility that you may not be healthier in the future. So take advantage of what you can get right now. And lastly, don't forget to take care of other insurance planning, such as disability and long-term care, both of which are very important for preserving your assets, and specifically protecting retirement and legacy assets, which is something that many times we don't think of. The uncertainty around how COVID-19 can impact us in the future if we are affected, that long-term care planning can end up being a crucial component of our asset preservation. So just something to keep in mind. So if you take nothing else from today, if everything, all of this has gone, over your head, we're too technical, we're too, life insurance technical, don't, make sure that you go back to an experienced insurance advisor, have them review your coverage or your client's coverage, make sure it still meets your expectation so that it can give you that peace of mind that we would definitely feel that you need and deserve.
Thank you. We've got about 3 minutes on my watch. Are there any questions in the Q&A box, Celeste, that you can see?
Let me see. Yes, Dave Foles, are you seeing increases in long-term care policies? So we've seen in the standalone market, so there's a couple of different types of long-term care policies. There's the standalone policies that have been around for a long time, and we've seen increases in those for many, many years. I mean, we've had clients whose premium has doubled or tripled in certain situations. And that's to be expected because life insurance companies didn't price them properly initially. They expected higher lapse ratios. They didn't expect as many people to use it. People are living longer, and long-term care is something that people are taking advantage of. So I 100% think those increases are going to continue because those products are priced properly. Nowadays, there's more modern products where it's not a use it or lose it. So there's going to be a life insurance component to it. It's primarily long-term care focused, but on the back end, if you never use it, there's a small life insurance benefit that could be paid out to a beneficiary. And I can tell you that we've already seen increases there as well. For the same reasons, these products are still interest rate sensitive. And once again, with the future uncertainty of how COVID may impact, it could definitely affect their pricing, the lapse they expect, how many people they expect to use it. So definitely expect that there's going to be some increases there. You can take one more question. So Kent Weimer, are underwriting criteria getting stricter for long-term care? Absolutely. Right now, the questions are still the same. So there's about 8 different questions that you have to answer to see if you qualify for long-term care. And if you don't, you're pretty much automatically knocked out. We suspect that in the future, those questions may include something like, have you been affected by COVID? Or maybe, do you have any type of respiratory problems that would make you more susceptible to something like that? Now, this is more me just kind of thinking of what could possibly happen. But just based on past experience and what insurance companies do, based on what happens from a health perspective or what's happening in the world, we definitely expect that there's going to be some stricter underwriting there.
Celeste, we're at 15 minutes. If you would close with your signature closing remark, I think that'd be appropriate.
Yes, absolutely. So we appreciate everyone that's joined. If you have any questions or we didn't get to your question, we'll reach out to you directly. But on behalf of the entire C3 team, we look forward to collaborating with you, and have a wonderful day.
Thank you very much. Thanks for joining us.
Thank you, everyone.